Hello and happy Friday. Good morning. I'm Kelvin here again. I'm back for my one-day break. Welcome to today's Daily Dose of Market Insights by OANDA. Today will be Friday, the 23rd of February 2024. So before we start our daily dose, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, as well as projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so yes, so before we jump straight into the short-term technical outlook on the various broad-based cross assets, let's have a recap on what has taken shape yesterday in terms of events and release of economic data. So the big highlight yesterday was the very strong earnings beat by Nvidia. So for those who actually focus on the US major stock indices, Nvidia has been the key component stock in Nasdaq and as well as S&P 500 that is driving the bulk of their respective gains since last year. Why? Because on this AI optimism team play. Okay, so yesterday or the day, I would say that on Wednesday early Singapore time, or put away that it's Wednesday at the close of Wednesday US session. Pardon me, to be exact, is at the close of yesterday, at the close of Wednesday US session, which is i.e. yesterday's early Singapore time, about 5 a.m. Nvidia releases its Q4 earnings. So the Q4 earnings actually beat expectation. So if you look at what we see over here in my screen, let me share with you all. Okay, so let me expand it. All right. Okay, so it actually beat expectation. Okay, and the stock price rises the most in 9 months. Okay, so all in all, right, to be precise, I want to sum for you is that their earnings, EPS, earnings per share for Q4 last year came in at $5.16. 5.16 US dollar. So that actually beat expectation by 10%. Market is expecting $4.59 EPS for Q4 last year. And what's most important, during the earnings, we call it announcement conference, their management, Miss Nvidia management actually guided this quarter revenue to be much higher. That means this quarter revenue is Q4 2024 to be much higher at 24 billion. Surpassing an average of analyst consensus of 21.9 billion. All right. So all in all, right, what we could see right now over here is that yesterday's Nvidia actually has a very sterling single-day rally of 16%. They're just up 16% yesterday. So what we could see is that yesterday, due to this strong earnings boost and AI continuation of AI optimism team play, so Nvidia, right, actually added about 277 billion in market cap within a single day. All right, so bringing the market cap value to near the $2 trillion. All right, so that actually surpassed the previous month where being made by Meta at 197 billion. So if you look at my chart over here, right, Nvidia so far yesterday has really break another record by making it is by having the biggest single day market cap being added, okay, within a single day of 277 billion. All right, so we know that some of the skeptics may say that this is over optimism, there's this over concentrated risk in Nvidia, but from a behavioral perspective and as well as from a technical analysis perspective, for sure the ongoing major and medium term uptrend and even the short term uptrend of the US major stock indices is still intact. Okay, we can't fight this ongoing trending behavior or herding behavior of this market, even though, yeah, we know there is over concentrated risk. So that at the best we could do is to actually adhere to proper risk management tactics when we trade into this kind of what I call over concentrated a market that is heavily dependent on only a few handful of component stocks. So right now at the start of this year is being pretty much driven by Nvidia. Okay, so that is the perspective from a stock market, from a what I call the event from a stock market perspective. So overall net the ongoing short-term uptrend continues for the major US stock indices. The SPX added in 2.11% yesterday. The Nasdaq for sure is the top performer, up 3%, driven by Nvidia. The Dow Jones Industrial Average added 1.18%. The Russell 2000 added 0.96%. All right. So now back to the FX market story. So over the FX market is rather mixed. The dollar, so dollar was mixed yesterday, almost unchanged. But however, if you look at the dollar index as a whole, if you look at my screen over here, so what we could see over here as a whole right now, the dollar index has remained soft below the resistance that we highlighted earlier at the start of this week, which is the 104.85 level, which confluence with the former minor swing low of 6th of November, and as well as the Fibo retracement, the key Fibo retracement of 61.8% Fibo retracement of the previous medium-term down move from 3rd of October all the way down to 28th of December last year. Okay, at 104.85. So since 104.85 that was printed on last Tuesday, that means the hotter than US CPI print data, the dollar strength failed to actually break above 104.85 and continue to remain soft in the last 7 sessions. And yesterday, it managed to survive at the key near-term support of 103.70, which also correspond to the 200-day moving average. So it seems to us that the risk is more skewed towards dollar weakness coming back into the picture rather than a dollar strength resurgence. So that also actually helped the ongoing risk on behavior that is being seen on the US stock indices spreading to the rest of the major indices as well, which I want to cover to you all. I.e. the German 30 has really also broke new fresh high, all-time high, followed by the Japan 225, and as well as the weakest Hong Kong 33 index also remain firm above a key respective support, where the Hong Kong index or the Hong Kong 33 index going to evolve within a short-term counter-trend scenario. So that actually I will uncover more when we go into that short-term technical outlook on the major stock indices. All right, so another news that's related to the FX market is traders in Eurozone has now reduced bets on ECB cuts this year to less than 1 point. Okay, so money markets only just pricing 99 basis point of monetary easing this year. So that actually kind of ease off from the start of this year. So initially, right, at the start of this year, market also looking at around what 6 interest rate cut from ECB, but right now is only showing less than 425 basis point cuts are being priced through the end of 2024. So net, right, overall that could actually explain why yesterday dollar strength was muted as well, because ECB seems to be also getting less dovish. So being ECB getting less dovish, the interest rate differential between Eurozone and between US and Eurozone also starts to reduce as well. That means the US interest rate premium over interest rate in Eurozone. Okay, so that actually came when French data beat expectation. So that actually that was actually the PMI data that was released yesterday as well, both on the services and the manufacturing flash PMI data for February. Okay, so that actually sum up for the key highlights that I've done highlight for the FX market. And what data that was released before our 11 a.m. daily dose today was this important China housing data. Okay, let me expand my screen. Okay, sorry, this before that over here. Okay, Friday 23rd. So what we could see over here is that the China housing price index continued to tumble negative 0.7% year on year. So if you look at the trend of the housing data over here in China, it continued to be falling. Okay, falling off the cliff. So there is still very much of a persistent property market weakness, persistent weakness in the property market in China. So as we know that the property market constitute, I think, close to about what more than 60% of the wealth effect on the China consumers, which also indirectly put intact that deflationary risk spiral in China that is still intact. So all in all, right, what we could see over here is that unless we start to see a very clear signs that China top policymakers were to implement more forceful fiscal stimulus policy to actually address this ongoing persistent weakness in the China property market, whatever rebound that we see so far in the Hang Seng Index, the Hong Kong 33, and as well as other respective China benchmark stock indices are likely to be more likely skewed towards counter trend rebound scenario rather than the start of a major uptrend phase. Okay, so this is what I'm actually reading the market right now. Okay, based on the balance from fundamental and as well as a technical analysis perspective. All right, so these are the key events and data highlight points that I'd like to share with you all, and as well as hoping to link the dots a bit across the market. Okay, so let us start with the major stock indices first. All right, in terms of the short-term technical outlook. Okay, start from Asia. Okay, let us start with Japan 225. Then before we expand my screen, right, let me expand my screen now or hiding myself for a while. Okay, Japan 225 or the Nikkei 225, Japan 225 is quite a platform. So for sure, right, the Nikkei 225 has really surpassed the former all-time high. So that actually came within our expectation. So for those who actually follow our daily dose of market insights, right, we have been having that bullish bias since the start of the year for Japan 225, except that we do still have some, we call it short-term pullback, where we're able to turn on a short-term bearish bias basis. But overall, the trend for the Japan 225 still remain intact on the bullish side of the story, both from a medium-term and a short-term perspective. So for sure, right now over here is that the RSI is already been start to exit from the kind of extreme overbought level. So right now it's actually coming very close to the short-term resistance. The second short-term resistance that we have, those who recall when I went on leave at the start of this week, when I went on leave yesterday. So at the start of it, I highlighted two short-term resistance level to watch in this ongoing short-term uptrend phase or bullish bias phase for the Japan 225. First will be at the 39,200 level, which already been surpassed yesterday, then followed by 39,510, 39,600. So right now it's coming very close to this level. So potentially, right, there could be a bit of a pullback coming into play, given that the RSI now has started to exit from an overbought level. So as long as this pullback managed to hold above this Titan key short-term pivotal support that I have for today, which is 38,850, slightly below the former all-time high, it actually corresponds to this level over here, the former minor swing high of 16th of Feb. Breakout on yesterday, pullback, retested it, and thereafter shaped that rebound during the US session, or the impulsive up move during the US session. So for sure, this is a very key support level to watch on an intraday basis. So as long as 38,850 short-term pivotal support holds, we will still maintain that short-term bullish bias on the Japan 225, with the next resistance to watch will be at 40,090 level, correspond to a one-time Fibo extension that I draw from the low of 7th of February, project it to the high of 13th of February, as well project it to the 14th of February, and as well as if we do the cluster Fibo extension level, linking the lows of 14th of Feb, project it to 16th of Feb, extend it downward to 21st of Feb, minor swing low area is also correspond to the 1.68 Fibo wave 3 Fibo, a standard wave 3 Fibo extension level as well, for 40,090, very close to this level, and also very close to the upper limit of this intersection between the minor ascending channel from the low of 7th of Feb, and the green one will be the medium term ascending channel that I drew from the 4th of January. Okay, intersecting at the graphical level of 4090. So the next resistance level is pretty key, 4090. How I derive it: cluster of Fibo extension level correspond to the intersection of two different swing point of minor and medium term ascending channel upper boundary that I shared with you earlier. Only a hourly close below 38,850 will negate this bullish tone to see a deeper minor corrective pullback to test the lower limit of this minor ascending channel from the low of 7th of February. I think it's a support at 38,450, then slash 38,100, which is the swing low area of 21st of February. Right, so net overall still maintain that short-term bullish bias on the Japan 225, with a tighter key short-term pivotal support for today at 38,850. Okay, so what's cooking next for the Hang Seng Index or the Hong Kong 33 Index we call in our platform? So price action managed to hit the resistance level that I highlighted on Wednesday before I went on break, 16,760, 16,860. RSI still okay, still holding above the parallel ascending trend line support that I draw over here right at the screen. We also correspond very closely to the 50 level mark. So all in all, we still don't see signs of a short-term exhaustion in the ongoing minor counter trend scenario that is playing out on the Hong Kong 33 index. That price action going to trade higher high within this minor ascending channel that I drew from the low of 22nd of Jan 2020, 22nd of Jan 2024 this year. Okay, there's a typo error here. Okay, so net I'll be using the 50-day moving average, also pretty much corresponding to the 20-day moving average as well, due to the fact that this 20-day moving average is now upward sloping. A couple perhaps after at the end of today's session, it should actually be meeting together with the 50-day moving average as well. So I'll be using this 16,140. We saw confluence with the minor swing low of this Monday and Tuesday as a tighten key short-term pivotal support level to maintain this ongoing short-term bullish bias within this short-term minor counter trend rebound scenario that is still unfolding, with the next resistance to watch will be at a Fibo extension cluster level 17,010, 17,130. We also correspond to the upper limit of this minor ascending channel that I drew from the low of 22nd of February. Only hourly close below 16,140 will negate this short-term bullish bias view, pardon me, to see the price action to have a deeper minor pullback to retest the lower limit of this minor ascending channel, also acting as a support that is confluencing at the last Thursday, 15th of February minor swing low at 15,720. Okay, German 30. So German 30, before I went on leave on Thursday yesterday, we do have a bearish bias, right? Having the German 30 to slip down towards the 17,000 level slash 16,950 level. So that price level was almost met on yesterday's European session. Okay, so yesterday European session it printed a low of 17,014, very close to the 17,000 support level that we highlight to look out for that minor what you call it corrective decline scenario. Then thereafter the price action going to surge upwards, driven by a very a positive momentum globally that's being triggered by the AI optimism team play after Nvidia better than expected earnings result beat. So with that, right, for sure, price action very clearly has really surpassed the expanding triangle range configuration that was in place, this dotted line, gray line that is in place since the high of 30th of Jan. So all in all, right, what we could see right now for sure is we are now in the start of a new impulsive up move. Okay, that means i.e. The birth of a new short-term uptrend, okay, from the low of 14th of February that I draw from here, this minor ascending channel. So with the next resistance level to watch will be at 17,470 level, all right, the upper limit of this minor ascending channel. So right now what you could see here is that the RSI also start to exit from an extreme overbought level. Okay, you could draw this here. Yep, it's a rather extreme overbought level. So now I try to exit from this overbought zone. So i.e. what we could see right now, potentially there could be a minor pullback taking shape in the first step before continuing its impulsive sequence. Okay, potentially. Why? Because of the exit from this overbought zone after the RSI come close to a very close extreme overbought level. Okay, you could see over here. So net over here, right, the first pullback level to watch will be at 17,290. So what's 17,290? It corresponds to the median line, the dotted line here, the median line of this minor ascending channel that I drew from the low of 14th of February, and as well as if you take the Fibo retracement of this yesterday impulsive up move sequence to yesterday's intraday high, it also corresponds to it. Pardon me. It also corresponds close to the 38% Fibo extension, 38.2% Fibo retracement level as well. But I don't want to use this level too tight. I rather place it over here the 17,180 mark, which was the former 16th of February minor swing high, now turns into pullback support, also correspond to the lower limit of this minor ascending channel, and as well as the golden ratio of 61.8 Fibo retracement of this recent impulsive up move. Okay, so as long as the pullback managed to hold at the 17,180 short-term pivotal support that we have for today, we will still maintain that short-term bullish outlook after that potential pullback take shape on the German 30 index. First resistance to watch 17,470, then a break above it exposes the next near-term resistance, which is a Fibo extension cluster level as well, 17,590/17,630. Only an hourly close below 17,180 will negate this we call it bullish bias view to see another round of very choppy kind of corrective pullback to retest the 20-day moving average, now acting as a support at the psychological level as well, closely at 17,000. Okay, now US major stock indices. So for sure that like I highlight before we before I go on my one-day break yesterday, the US Wall Street 30 has a much more positive technical outlook compared to the Nasdaq 100 before the earnings announcement of Nvidia. So we were actually neutral on Wednesday before I went on leave. So neutral between 38,645 and neutral between 38,360. So for sure, price action already broke out above 38,645. So we will now be flipping to a bullish bias on the US Wall Street 30. So given that the RSI is also hovering at the overbought level, so there could be a risk of a pullback right now, given yesterday very strong impulsive up move. So the pullback level to watch, right, if I do the Fibo retracement, taking from the low of yesterday's swing low all the way up to yesterday's session high, is at 38.2% Fibo retracement, which is also correspond to the former minor swing high area of 16th of February level, turns into a minor pullback support now at 38,810. Okay, but I do not want to use 38,810 too tight, so I'll use slightly lower 38,645 as my short-term pivotal support for today, which is also the golden ratio of 61.8 Fibo retracement of yesterday impulsive up move, also correspond to the upward sloping 20-day moving average as well, very closely. So any potential pullback that in maximum scenario managed to hold above 38,645 short-term pivotal support that I have for today, we will still maintain that short-term bullish bias on the US Wall Street 30. Next resistance to watch after 39,150 will be 39,400, which is the 0.645 Fibo extension level, and so correspond very closely to this upper limit of this minor ascending channel that I drew from the low of 18th of Jan 2024. All right, only an hourly close below 38,645 will negate this bullish bias view to see a deeper minor corrective pullback to retest the lower limit of this minor ascending channel. We saw confluence with this Thursday minor swing low, and the last week congestion area at 38,360. All right, so on the Nasdaq 100, so we call that Nasdaq 100. Before I go on leave, we do have a bearish bias on Nasdaq 100. So the first bearish bias, the first support level to watch will be at 17,350. Sorry, pardon me. I think there is no sound, if I'm not wrong. Okay, let me check my audio again. Why there is no sound? Okay. Mic test 1 2 3. Could test 1 2 3. Test 1 2 3. Okay, give me a minute. Let me do my apologies. Let me do a sound check. Okay, give me a few minutes. Sorry about that. So I'm just doing a sound check on the technical side just to make sure that everything is okay. Okay, strange. There's no sound. Okay, give me a minute. Let me test. Is it okay now? Okay, good, good, good. All right, sorry about that. I think there is some technical, as usual, connection issue. Okay, now my sound is back. My apologies for earlier. Okay, so now where was I? Okay, Nasdaq 100. Okay, so before I went on leave, Nasdaq 100, we do have a short-term bearish bias because prior to Nvidia earnings announcement, Nvidia has a very weak short-term price technical configuration. So the Nasdaq 100, right, the first support level to watch was 17,350 followed by 17,160. So indeed, right, price action tested 17,350. That's the first short-term support. Didn't hit 17,160 and managed to shape that V-shaped recovery. So net, I mean, I would say that the short-term bearish buy also has really met the scenario by hitting the 17,350 before that V-shaped recovery and reintegrate back above the 20-day moving average. So for sure now, right, we got to actually now flip back to a bullish bias again on the Nasdaq 100, given the very strong momentum that has been inherent after the release of the stronger than expected earnings beat on Nvidia. So with that, right, there could be also a risk of a short-term pullback, given that the RSI now is hovering at the overbought level and is also starting to has really met the 18,030 level as well. So that was the first resistance that we highlighted since last week. And the way it made it over here, if you look at the candlestick, right, the candlestick start to show what you call hourly shooting star at the close of yesterday US session. So perhaps there could be a bit of potential short-term profit taking activities taking shape today, all right, and also given the fact that the RSI is really in the overbought level. So net, right, there could be a potential pullback coming to play. So the first pullback level to watch will be at 17,810 level. So what 7,810 level, if we do, is graphically as well, the minor swing high area of last Friday. And if we were to actually do a Fibo retracement of yesterday's impulsive up move, it also corresponds closely to the 38.2% Fibo retracement. But I'll be using the 17,650. That level corresponds to 50% of the Fibo retracement of yesterday's impulsive up move, and so correspond to another key technical element, which is the 20-day moving average, also acting as support at 17,650. All right. So as long as any potential pullback that may take shape later today due to the overbought level and the emergence of the hourly shooting star candlestick, as long as any pullback manage to hold above the 17,650 short-term pivotal support, we will have a bullish bias, short-term bullish bias on the Nasdaq 100, with the next resistance level to watch, which is the Fibo extension cluster at 18,220, 18,270. Only an hourly close below 17,650 will negate this bullish tone to see the extension of the minor corrective pullback to retest yesterday's minor swing low area at 17,350 level. All right. So overall, net, we still have a bullish bias across the board for today in the major stock US indices that I share with you all. Now, moving on to the FX market. So we know that the dollar index starts to turn weak, which I actually explained to you all or highlight to you all at the start of today's outlook. Daily dose, pardon me. So if you could recall, on Wednesday, before I went on leave on Thursday, we flipped to a bullish bias on the euro dollar, given its breakout on the former minor descending channel resistance that I drew from the high of 28th of December, and as well as the bullish break from the 20-day moving average as well. It actually rallied yesterday. It hit the resistance that we also highlighted, which is close to the 50-day moving average, and as well as the minor range resistance that is in place since 26th of Jan to 2nd of February, right at 1890 level, 1.0890 level, before that pullback takes shape or that minor sell-off took place. And where the sell-off actually store, the sell-off store right exactly at the 20-day moving average, and as well as the lower limit of this ongoing minor ascending channel that the price is going to evolve in since the low of 14th of February. So net, right, we will still maintain that bullish bias on the euro dollar, with short-term pivotal support level to watch will be at 1.0795 level. Now the RSI also managed to actually try to recapture back the 50 level mark. So as long as 1.0795 short-term pivotal support holds on the euro dollar, still maintain that short-term bullish bias First resistance to watch for sure will be 1.0890. Above it exposes the next resistance cluster level at 1.0935 / 1.0950, which is a 0.761 0.764 Fibo extension level, and as well as the former minor congestion area from the low of 10th of Jan to 15th of Jan that I show on my screen over here. However, an hourly close below 1.0795 will invalidate the short-term bullish bias to see a very complicated minor corrective decline scenario to unfold to retest the support zone of 1.0735 / 1.0725, which is this congestion area here. And as well, if we do the Fibo retracement of this entire up move, is confluence closely to the 76.4 Fibo retracement as well. Okay, so with the very strong euro dollar that is being taken shape right now on the FX market, so we'll be flipping to a bullish bias instead of a neutrality stance that we have since the start of this week on the sterling dollar. So the sterling dollar also continued to actually surpass the 20-day moving average, but managed to churn around the 50-day moving average yesterday. But so far, it's going to shape a series of higher high and higher low. Okay, from higher low, what we could see over here. So with that, right, the near-term support level to watch in any potential pullback, right, for sure will be around this level here. Okay, which is okay at the 1.2635 level. We saw very close to the 20-day moving average, but if you look at it, it tend to whipsaw around the 20-day moving average in the last few sessions. So by using a short-term pivotal support at this level is not prudent, so I'll put it slightly lower, which is at the 1.2580 level. So 1.2580 level, it confluence with the minor swing low of this Tuesday, and as well as the minor ascending trend line that I drew from the low of last Wednesday. Okay, they're actually confluencing at also very close to the 200-day moving average as well. So there's actually three different elements pointing to the same level at 1.2580. So for sure, this will be the key short-term pivotal support to maintain this potential bullish bias that I have on the sterling dollar for today. First resistance to watch will be a zone at 12740 / 12760, which correspond to the minor swing high area of 24th of Jan and 2nd of February. This area here, and only an hourly close below 12580 will invalidate this short-term bullish bias that we have to see another round of very choppy minor corrective decline scenario to unfold to retest 1.2540 support level, which is the minor swing low area of 14th of Feb / 1.25 psychological level. All right. Asia Pacific currency. So the Aussie dollar, we also have a neutrality stance on last Wednesday before I went on leave. So after yesterday's strong push up and today recapturing of that 200-day moving average, we'll be flipping from a neutrality stance to a bullish bias, short-term bullish bias. So for sure, the minor support level or the pullback support level to watch right now potentially will be at this area here, which is close to today's Asia session swing low at 65.50, but net right, but having we will actually use a slightly lower level, which is this former minor swing high now turns into a pullback support level that was actually survived on last Thursday, and survived on last Thursday, last Wednesday, this Wednesday, and as well as this Thursday. So this is the form a higher minor swing low right at the former resistance level, former swing high now turns into a pullback support, and the way it formed the pullback support, it formed a higher low and right above the 200-day moving average, right above the 20-day moving average as well. So there's actually three different kind of element pointing to a similar level at 65.40. Okay, so using 65.40 as my key short-term pivotal support, may flip to a bullish bias for today on the Aussie dollar. First resistance to watch will be at this minor range resistance that is in place since 24th of Jan at 66.20, also corresponding to the 50-day moving average as well. Only an hourly close below 65.40 will invalidate this short-term bullish bias to see another round of choppy minor corrective decline to expose the next near-term support level at 65 figure level. Okay. dollar yen, no change. So dollar yen continue to be congested within this zone here, 15070. So 15070 is being tested one time, two times, three times at yesterday's US session, refused to break. So for sure, 15070 is a short-term pivotal resistance to maintain this ongoing minor bearish bias on the dollar yen. First support to watch will be the range. Its range support at 14960. Only an hourly close below 14960 potentially may add more impulses for the next support level to come in at 14880, 14840, also cross 14880, 14840 level. However, an hourly close above 150.70 will invalidate this bearish bias view to see a squeeze up to retest the major resistance zone at 15140/15195. Okay, spot gold. So for spot gold, continue to actually hover pretty much strongly. So the RSI also continue to hold above a minor ascending trendline support level. Okay, let me draw for you. Okay, over here. And all in all, right, it seems to us that it's going to inch upwards towards the upper limit of this symmetrical triangle range configuration that I depicted for you all in these two gray lines over here. Okay, so right now it's coming very close to the upper limit. So this symmetrical triangle range resistance is in place since 28th of December last year. So the upper limit is 2032 followed by 2042. Okay, this level here. So it seems then 2032 was tested on yesterday before that minor pullback take shape. Okay, so overall, we will still be using a slightly adjusted short-term pivotal support level at 2013 congestion area over here. So 2013, as well as 2013 holds, we will still maintain that short-term bullish bias within the symmetrical triangle range configuration to test the upper limit at 2032/2042. Only an hourly close below 2013 will see the price action of the gold to actually shape that pullback towards the lower limit, the lower area of this symmetrical triangle range configuration at 1996 1986 level zone, this zone over here. Okay, lastly, WTI crude oil. So WTI crude oil continues to, okay, give me a minute. Yeah, over here, WTI crude oil continue to actually can't break above the upper limit of this symmetrical triangle range configuration that is in place since 15th of November. So net right, it's going to actually churn downwards. So it's very messy configuration right now. So for sure, the 7840, 79 level will be the short-term pivotal resistance that we have to actually maintain that short-term bearish bias for it to churn down potentially towards the lower area of this ongoing symmetrical triangle range configuration. First support level to watch will be Wednesday minor swing low area at 76.70. We also correspond to the 20-day moving average as well. Still maintain that short-term bearish bias for today on West Texas oil. However, an hourly close above 79 level, figure level will actually expose the next near-term resistance level at 79.80. All right, so now that's pretty, that sums up for the short-term technical outlook on the various cross asset. So before we go, let us take a look at what are the key data to look out for today. Okay, so what we do have over here is we have one of the key economy in the Eurozone, which is Germany. So Germany will start to actually release their some sentiment indicator. They call the Info Business Climate at 5 p.m. Singapore time today. Then we have two ECB officials speaking at 5:20 and 5:30 later. All right, then throughout the session will be a rather quiet session for today. Yeah, so today there is in fact no key US data release as well. All right, so with that, do have a great weekend ahead, and we shall speak again on next Monday. Thank you.